Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, this is the Weekly FX Navigator podcast. My name's Manpreet, your host for today. This week, the world will be watching Australia and New Zealand, not so much for their cricketing prowess, but for their monetary policies and economic outlooks, as the central banks provide their policy and commentary accompanying that. The question for us as investors, of course, is which currency will come out on top. The Reserve Bank of Australia, the first to bat today, consensus strongly suggests that there will be no change in the cash rate, but we expect the crowd will be watching intently for any increase in the pace of bond purchase tapering from the current $4 billion per week. A signal from the governor may also be forthcoming that a rate hike might be possible earlier than previously indicated in 2024, perhaps enforcing a follow-on from the US Fed's recent dot plot update. Momentum for the Australian economy could be building as vaccination rates have soared. The RBA's outlook may be more positive now that a partial reopening of international borders is planned for November. Rising coal and gas prices could also offset recent iron ore price falls, and if China looks to secure scarce supplies, this could of course provide an extra boost for the Aussie. The Reserve Bank of New Zealand joins in on Wednesday, and there's strong consensus that they will hike the cash rate by 25 basis points to 0.5%. Further rate hikes are already priced by markets, with another 25 basis points anticipated in November and a further 75 basis points possible by the end of Q3 next year. Once again, we expect the RBNZ's economic outlook and narrative to be closely monitored since market expectations are already quite aggressive. The recent strength in the US dollar has kept both the Aussie and Kiwi under some pressure, but we see technical support levels in both that should hold and serve as a launchpad for gains in Q4. The Aussie dollar, in our view, has strong support versus the dollar at around 70 to 71 cents. And as the US dollar rally likely fades and reverses, we would look for a rally towards the 75 cents area. Similarly, the Kiwi should hold technical support between 67 to 68 cents versus the US dollar and push towards 72 cents in the coming weeks. We believe both currencies are attractive at these levels, but between them we have a slight preference for the Aussie dollar since we see more scope for a positive surprise compared to the Kiwi dollar where a lot is already priced in. And that's the close of play for today's podcast. If you're a valued client of Standard Chartered, please speak with your relationship manager to find out more about our publications. If you've enjoyed what you've heard, remember to like, share and subscribe. Thank you for listening, and we'll speak again next week.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.